Welcome back to the Pachira Financials YouTube channel. I'm here to tell you that tax planning starts now. Do not wait until it's too late to start implementing a lot of these tax strategies that can save you money on taxes. My name is Olamide Owetusa. Everyone calls me Day, and I'm going to walk you through the most important things that you need to remember to better prepare for this upcoming tax season. So, one of the things that you need to keep in mind is that a lot of tax benefits actually expire each year. Two very important tax benefits that are expiring on December 31st, 2022 relate to bonus depreciation and business meal deductions. Let's start with bonus depreciation. Bonus depreciation allows you to 100% deduct a business asset in the year that you purchase it. So if you purchase any heavy machinery, equipment, or even a business vehicle, you may be able to 100% deduct the cost of that vehicle. Now, with that being said, after December 31st, 2022, you will no longer be able to 100% deduct business assets in the year that they're purchased. After December 31st, 2022, you will only be able to deduct about 80% of the cost of business asset purchases. Very important thing to remember. The next thing you want to remember is that for 2022, business meals are 100% deductible. Yep. So if you go out to eat with a client, with a vendor, with potential business partners, you can deduct those business meals. However, after December 31st, 2022, business meals will go back to being only 50% deductible. That means that all of your business meals, you can only deduct half of the cost. Highly recommend that you take these things into consideration. If you have any business assets that you want to purchase, it's probably preferable to do that before the December 31st deadline. Same with business meals. Definitely take advantage of these tax deductions and utilize your business for your benefit. If you have a lot of networking to do, you're meeting with clients, you're meeting with customers, you're traveling for work, those meals can be considered business meals and can be deductible. So first things first, remember that December 31st, 2022, there are some tax benefits that are expiring. Okay, so another thing that you need to keep in mind when preparing for tax season is estimated taxes. So a lot of people don't realize that you're legally required to pay taxes throughout the year on income that you earn. Now, most of us don't have to worry about this because our employers take taxes out of our paychecks every month. However, if you are self-employed, if you're a contractor, if you are a side hustler and you make side income, you may be required to calculate estimated taxes and remit these payments to the IRS. Estimated taxes are due on a quarterly basis. Now, if you don't pay your estimated taxes, not only may you be subjected to a penalty, but you may also owe a hefty tax bill at the end of the year. Why? Because all your taxes throughout the year are now going to be in a lump sum on your tax return. It's much easier to make your quarterly tax payments so that when you file your taxes, most of your taxes are already paid. So, as a reminder, make sure that you are not only filing your taxes, but make sure that you're also paying any estimated quarterly taxes throughout the year. So the last thing that small business owners need to keep in mind when filing their taxes is self-employment taxes, and I'll explain why. Self-employment taxes are basically FICA taxes that self-employed individuals must pay. If you are an independent contractor, if you have a side hustle, and you make profit from any of these businesses, even if you're employed, you may still be subjected to self-employment taxes on any small business income. So we all know what Social Security and Medicare is, right? Most of us see it come out of our paychecks every 2 weeks. What a lot of people don't know is that your employer is also paying Social Security and Medicare on your income. So you're paying about 7.65% in FICA taxes, which is also Social Security and Medicare, while your employer is also paying 7.65% in FICA taxes. So in total, the IRS is receiving 15.3% in FICA taxes off of your income. Now, if you're self-employed, you're going to be required to pay both the employee portion and the employer portion of self-employment taxes. Meaning that as self-employed individual is going to be required to pay about 15% of their net profit in self-employment taxes. Now, this is before you add on any federal or state taxes. This can make your total tax liability almost 40% of your small business income. Not ideal. So what a lot of people do to avoid these costly taxes is that a lot of people elect S-Corp designation. What that means is that you will file a form with the IRS to be taxed as an S-Corporation. This will allow you to differentiate your business profits between two types of income. The first one being employment income, the second one being distribution income. Something really important to remember is that self-employment taxes and FICA taxes are only subjected on employment income. You do not have to pay self-employment taxes on passive income. What that means is rental income, which is considered passive income, capital gains, all of those are not subjected to that 15% tax. Now, if you are an S corporation owner, the profits you receive from your business are distributions, meaning that you invested in this business and you're just receiving the profits from your investment. Distributions are not subjected to self-employment taxes, but there is a catch. The IRS knows that everyone will just elect S-Corp status so that they can avoid those self-employment taxes, which is why the IRS requires small business owners to pay themselves a reasonable salary if they're working for their business. So let's use an example. Let's say I own a laundromat. I don't work there. I just hire people. I have a general manager who manages all the day-to-day of the laundromat. I receive profit at the end of the month. That profit is pretty much investment income, meaning I invested in this laundromat, I sit at home all month, and I just collect a check at the end of each month. That check is considered passive income. That is a distribution from my business, and I would not be required to pay self-employment taxes on that distribution. Let's run that back. Now, let's say I actually do work at this laundromat. I own it and I work there. I'm behind the desk every day. That is no longer passive income, and any earnings that I make working at that laundromat is going to be subjected to FICA taxes. So, if I work for my business, I'd be required to process payroll for myself for the hours that I'm working there. Anything else that I can get in a distribution, and I don't have to pay self-employment taxes on it. So essentially, as an S corporation, you're separating your income as employment income, which is subjected to self-employment taxes, but then all of your other income from that business will not be subjected to self-employment taxes. Now, I highly recommend that you speak to a professional before electing any type of complex business structure like S corporation. A professional will be able to tell you if an S corp designation is right for you and your business. So, in conclusion, remember, self-employment taxes are costly and they're one of the largest tax expenses for small business owners. However, with proper planning and strategizing, there may be ways where you can lower your self-employment tax bill. Okay, so to recap everything that we mentioned in this video, I'm gonna tell you the top 3 things that you need to remember. Number 1, there are tax benefits that expire every year. This year, 2 important tax benefits are expiring, which is bonus depreciation and business meal deductions. Take advantage of these deductions and of these tax benefits before they expire. This is why it's important to do tax planning before tax season. Number 2, remember to pay estimated taxes throughout the year. If you're paying your estimated taxes throughout the year, you're not going to have, or hopefully you're not going to have, a hefty tax bill at the end of the year, mainly because you would have already paid a majority of your taxes due throughout the year. And lastly, keep in mind costly self-employment taxes. This is the biggest tax for small business owners. Self-employment taxes can be almost 15% of your net income. Now remember, there are strategies that you can implement to lower your self-employment tax. However, I would highly recommend that you speak to a professional accountant or CPA who can help you through making that type of decision. My name is Olamide Tusa, and I'm so grateful that you watched this video. I hope that you took some valuable lessons that can help you better prepare for tax season.